Welcome, everybody, to the Chinchilla Pickin' Podcast. It is October 29th, 2023 at 4:42 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I am joined by the Baron of Bonds, Brandon Beaver. Almost Halloween. How are you?
Suffering from the homeowner blues, Dave. So
Yes.
yesterday, I have these two big ugly bushes in my yard, and because of the neck problems I had, I mentioned a couple episodes ago, where I found out I've actually had a fractured neck for about 20 years. One of my vertebrae is small fracture, but enough to keep pinching my nerve over and over again every year, about 2 or 3 times a year.
Like how you pinch my nerve.
And then RSV and just basically this summer it was just totally done for. Like I did nothing this summer, except for cut the grass and general maintenance. But my yard was absolutely horrific. So these two front bushes, I'm trying to cut down. I got halfway through one of them, and my chain on my chainsaw bent. And yesterday, I thought my chainsaw had actually blown. I thought I blew the motor in it. But it was happening to be the chainsaw was bent and caught in the bar, and that's why it wasn't moving, thankfully. So I come back inside, smash my finger in the door as I'm coming back inside. It probably taught my neighbors a whole bunch of new cuss words. But also, a couple of weeks ago, I go into my garage and I look up and I see a ray of light shining through the roof. Notice a big hole in my roof, almost about 1.5 feet wide. So today, I went and bought a tarp because I actually want to get a roof on the garage, but I want to tarp it until that can happen. So the elements don't get in to the garage any more than they already have. And I'm up there, and there's this big tree branch about maybe 6 inches thick that's right on top of the garage that's blocking me from throwing this tarp over. Thankfully, and thank God for good neighbors. Neighbor comes over, grabs a handsaw, jumps up on the ladder, cuts that branch down for me, moves the tarp over, almost dies in the process because his ladder came unstuck from the ground and started sliding out from underneath him, but I caught it just in time. So I've had a day. We got it done just in time. That's tarped just before it started raining today. So at least there's that.
Nice. I did not have that kind of day. I will say, I'll give a couple shout outs. Here's my weekend in a quick shout out. F45 training. If you're in Cincinnati and you need to work out, want to get in shape, F45 training, they're going to be looking to open a second location in Oakley. Great training facility. I love them. I've lost weight with them. My weight has stayed off. I guess I gained a little bit back since I quit going for like 2 months. But I already feel stronger, better, and coming back off again. I still have maintained an over 35-pound weight loss since I started there. I was at 50-pound weight loss at one point. We're going to get back there. But great location, great workout. And then my Huskers won again. They have a winning record. So 5-3 Nebraska Cornhuskers. Nobody ever saw that come in the beginning of the season. Way to go. And Tyson Fury, Francis Ngannou fight last night. Tyson Fury won by split decision. I actually agree with the split decision. And a lot of people don't, but they don't understand boxing. It's the officials in boxing. So if you guys don't know, I'm a licensed boxing official of USA Boxing. USA Boxing does the Golden Globes, the Olympics, college, high school, the state fair shows, all that kind of stuff, right?
Yeah.
USA Boxing is the organization that does it. I'm a licensed official with them. People don't understand officiating is that 3 officials sit on different sides of the ring. They watch the fight, and each round is only judged for that round's activity, right? So Francis Ngannou had 3 great rounds, but the rest of the fight, he did not have great rounds. And I'm like, if you have to, as an official, I got to judge this fight, this round, based off this round, and then I got to forget that round ever happened and focus on the next round. Then I forget that round ever happened and I focus on the next round. And that's what you're taught to do as an official. You only look at that one round at a time, then you clear your mind and you get ready for the next round. So you may be angry with the decision of Tyson Fury winning, but he actually did win.
Yeah, I think a lot of people have been brought back into boxing, to be honest with you, by the Jake Paul kind of celebrity
That
novelty.
is not boxing. Those fights are not sanctioned by a boxing organization. Thus, they can and probably are rigged. All right. Don't get me started. I'll get my soapbox off, and you're going to get me heated right away if you start talking about Jake Paul boxing and any of those fancy boxing matches have been put out there.
But don't you think that it's done a good service for general boxing, that it's maybe brought more people into the fray again?
Yes, it has brought attention to boxing. Yes, it has. Boxing was in the middle of changing things up anyways, but it has brought attention to boxing. But so did the Tyson Fury Deontay Wilder series brought attention to boxing. So, so did Ruiz, when he was knocking out champs and you looked at him and he looked like the Pillsbury Doughboy. How is this guy knocking out champions? There was a lot of people that brought attention to boxing. Anthony Joshua brought attention to boxing. Don't get me, started on top. This is not a boxing M&A show. This is a stock and investment show.
Yeah.
Okay.
Well, I was going to age myself up and bring up Butterbean.
Butterbean. Yeah.
Speaking of
there you
people
go.
who have the body for boxing, but for some reasons excelled at the sport.
There you go. Well, anyways, let's bring it back to stock and investments. Don't we? Let's bring it back to that. So rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You hear the live back and forth right here on the show. And just to throw a wrench in this, I'm going to go first because Brandon thought he was going to go first this whole time. So now I'm really messing him up. I'm going to go first with what I got. All right. Are you ready, Brandon?
Yeah.
Let's go right into articles.
Okay.
Let's go right into articles. You want to do that?
Yeah, sure.
All right. This article is from Bazinga. It was 2 p.m. on October 28th, 2023. And the headline reads, Peter Schiff says gold possibly on a never return trajectory after Friday's spike past the $2,000 level. So what exactly happened on Friday? Gold futures for December delivery trading on the COMEX CME futures options ended at $2,016 an ounce, up 0.89% from the previous session. Right, so it had a close over 2K. Has been a while since it's held steady at that level. It's been at this level before. This is not the first time going there. But what they're saying here, the Economist here says, if on Monday it gaps up to a new record high, sub 2K gold will likely be a thing of the past. So in the earlier post, Schiff said that while investors expect gold prices to fall due to a rise in bond yield, inflation will likely cause both assets to soar. That is what he's thinking. Plus, with the tensions in the Middle East right now and with Ukraine and then China and Taiwan, he's expecting gold to stay higher for longer. Thoughts, Brandon?
Well, the PCE numbers were 3.6%, right? It was like 3.4, 3.6. I actually have it in my notes, but I'm looking at it right now. But yeah, so inflation is down, and it's we were at expectations on Friday. It does tend to kind of be a little bit more volatile than just a straight line down whenever you have high inflation. So it's possible that it pops again. But look, like right now, GDP is hot. Job growth is still there. The unemployment number is still low, and inflation coming down at the same time. The two things that most people think cause high inflation should be causing high inflation right now, and they're not. So, and that might be a lot to do with the global economic environment as well. I mean, Europe's not doing hot at all. So maybe that's keeping a lid on it. But the fact of the matter is, I like Peter Schiff. I listen to him a lot. He's on a lot of my podcasts that I listen to. But if anybody's trying to sell you something, if that's what they make their living doing, I kind of take it with a grain of salt.
That's fair. That's a fair analysis. Do you agree though? Like that the relation here with the bond yield, that even most people expect gold prices to fall due to a rise in bond yield. Do you agree with that statement?
I would expect the opposite. I would expect I
You
haven't
expect
actually
gold prices to go higher when bond yields go higher. So the 10-year yield goes up. You expect gold could go up.
But yeah, that's what I would expect. I would expect that to happen because if people are expecting higher inflation, then they're demanding more yields out of their bonds. And if they're expecting higher inflation, then they're going to buy gold as well. I haven't studied the correlation on that at all. So I'm just kind of speaking off the top of my head here. But just on the surface, it's a little bit nonsensical to me. I'm sure there's a reason. If Peter Schiff's saying it, I'm sure there's a reason. He's a smart guy, but I can't see it.
Gotcha. All right, cool. Good thoughts. The next one kind of goes into something you were going to talk about, and I have the article pulled up. They kind of go hand in hand, but I want to read this headline here, right? And we could just focus just on this headline, but it's going to go into something we are going to talk about later on as well. All right.
Yeah.
So the headline reads, and this is from Reuters, 10:30 a.m. on today. So 10:30 a.m. Sunday, 10:29 Reuters. Egypt's natural gas imports dropped to zero from 800 million cubic feet per day. And that's from the Egyptian cabinet released that statement. So why is this dropping? So basically, let me see if I can read this right. Earlier this month, Chevron shut down the Israeli Tamar gas field amid the Israeli-Hamas conflict and suspended all exports through the subsea EMG pipeline running from Ashkelon in southern Israel to Egypt. So Egypt relies upon Israeli gas imports to meet some of its domestic demand. Because of this, because of the shutdown, and because of imports dropping to zero, the Egyptian government has increased the duration of electricity cuts as a result of rising consumption and amid rising temperatures that coincided with the falling gas imports. That was a statement released by the Egyptian cabinet today. Given that the Tamari gas field is very important to the region for natural gas, is what we're talking about, natural gas. And given what you know about what we're going to happen later on with another European company with natural gas, do you see this all affecting the price of natural gas come Monday morning?
Yeah, probably.
All right. So you see a jump in the price.
Yeah.
Because they're having issues in multiple areas.
I would think so.
And did you know that Egypt was relied upon Israeli for natural gas that
I
much?
had absolutely no idea.
Most people did not. I
But
did not. Go ahead.
Egypt has been one of the only countries in that area that has actually backed Israel, and they've had a decent partnership for about 20 years. So I don't.
More than 20 years, man, since Sadat.
Yeah.
So yeah, so
That-
it's
that's
very, very interesting that Israel had to shut down that gas field and exports, and then boom, Egypt's now without any kind of imports whatsoever. So I'm sure they'll get it from somewhere. But what we're talking about later on is a company. We won't get into it right now, but we're talking about Siemens in Germany and their natural gas pipeline that they want to, have going on. There's a lot of need for natural gas, and especially since Russia's pipeline keeps getting damaged somehow. It's there's a big problem with natural gas in Europe right now. So there you go. Have that for what it is. Those are the only headlines I have today. Sorry, I don't have 3 headlines like normally. I only have 2. But I found that very interesting about the natural gas, and I want to get your idea about gold. I own gold. I actually have gold coins. Not here in my house, but there's safe deposit boxes you could put stuff in. But I think it's a good long-term, investment to pass on to your kids. Is how I look at it. I don't look at it as anything I'm going to use in my life.
Historically, it always has been.
Yeah. So, the one things I wanted to bring up was last week I talked a little bit about Bitcoin and how Bitcoin's halving, and Bitcoin was going to be, you're going to see a jump up in Bitcoin because of this and because of the ETFs going live in the following month. And what happened last week, Bitcoin went from 28 to 34, 35. It's nice to finally get some stuff right. I've been on a losing streak here the past couple months. So I feel good about that. I'm not too good about Tesla. Tesla was saying I'm still long in that. I'm still long investment. Don't get me wrong, But it's going down, and yeah, I just don't see a need for why Tesla's going down. There's too much going right with this company, and there's too many positive things. But then again, last time I bought Tesla, it dropped way back down and then went right back up. Same thing this time around. I bought Tesla, it goes back down, and it's going to come back up for me. So I just have to have the patience in what I believe in here with Tesla. So I seem to be doing the same thing with Tesla that you've done with Tesla in the past. But I said before this time around, I am a long-term investor before I started buying. So I'm holding on Tesla at this moment, and not really buying anymore this week because I did a double buy last week. So thoughts?
I see more and more Tesla vehicles on the road every day.
Oh, it's a massive company, and the profit margins is what I keep going. I keep circling back to profit margins, right? The Rivian CEO and the Rivian lobbyists, the lobbyists that work for Rivian Automotive, were on Capitol Hill begging for more money because they need it. Whereas Tesla's over here with these huge profit margins, then they can sell you a vehicle, half the cost of Rivian can, and still be profitable. This is why I'm like, guys, why are you buying Rivian stock right now? They're on the edge of going one way or another. Tesla, whereas, is actually profitable, has great profit margins in comparison to the rest of the EV field. And they have this AI technologies going into the AV section, the autonomous section, that's going to really cut that cost a lot more. And that's the point I'm looking at. I'm looking at it from a straight business perspective. I'm not looking at it as like look at me, I'm a fanboy of Elon. No, business perspective. Tesla's a well-run company. They're profitable. I'm like, this is a company that should be higher up in value than where it's at now.
Yeah. And when you mentioned Rivian, let's just call it the Karen SUV company.
We can do that if you want to. We can do that if you want to. So it goes back to like Warren Buffett and the Warren Buffett Way. It's a book I recommend to any newbie if you're going to learn about stocks and start understanding the terminology and how things work. In the Warren Buffett Way, talk about value in the company, right? I believe Tesla is valued lower than where it should be based off the principles in that book. I'm not doing this based off the seat in my pants saying, I'll throw a dart at Tesla it is this week. No, I mean, Tesla should be valued higher. It took that drop and it didn't need to. Another company that took a drop that I don't believe need to, and this is the last thing I have before I give it over to you, Brandon, is I want to do real quick, just 2 minutes. Google took a drop, a big drop for them this past earnings call. And the reasoning behind it, because they beat on the top line and bottom line. They have, I believe they have a strong future in AI, right? They're leading the field as far as AI software available. NVIDIA is the one leading the hardware part. But it was because of their cloud services. They're saying they were losing some business cloud services to other companies. I'm just sitting here like, who is taking? Is it Amazon? Is it Microsoft? Microsoft saying they're doing well. Azure, which is Microsoft's company, is, they're doing well. They're picking up some. I mean, but who is taking from Google? I mean, I think Google is in a good spot. Cloud servicing is, yes, it's not as strong as they want it to be, but I believe that with the AI aspect of Google, Google's in a better position than Microsoft right now.
I agree. The only thing that I wish, if I go on google.com and I go to Google something, right? And I Google it, I wish they would implement Bard into the Google search features, because I honestly lately, and even for this episode and for other episodes in the past, like the past 2 or 3 episodes, I've been using Bing to do research, because the AI that pops up and answers your questions on there has been incredibly helpful.
Really?
Surprisingly helpful on my research. And so I wish Google would get on the ball and implement mixing Bard into the search the same way that Microsoft has used the Bing AI chat with the search engine there.
All right. That's an interesting, nice little take on that. I like that. Yeah, well, there you go. That's all I got, Brandon. Brandon, it's your show now.
What did I say last week, though? I said last week, don't make any rash decisions. And what did people do when Google disappointed on cloud, okay, but even though the revenue and their profitability was still good,
Yeah,
they
they beat
sold
top line and bottom line.
they sold Meta and sent it down like 3%. All right. Only for like the next day, Mark Zuckerberg to come out and said, yeah, we had a record quarter of record profits and revenue last week. And then of course it got back up and we were about flat on Meta again. But man, if you sold Meta on that, I'm sorry. I don't the logic there was just so goofy.
It was a sector as a whole. The FANG stocks are looked at. FANG stocks are looked at as a sector. So if a company comes out and they have bad earnings, well, then the whole sector must be bad, and that's when you jump in and you buy these value companies.
Right, and it probably got sold off by ETFs and such. Just flat sold everything. But yeah, delivered its strongest sales and profits in history last quarter. They said that they continue to reverse course from its brutal 2022 when Jim Cramer was crying and saying that everybody should sell it. Happened to be the time to buy it. They reported $34.1 billion in sales and $4.39 per share. And that was topping the respective analyst estimates of $33.6 billion and $3.64. That, like I said, it makes Meta's most profitable quarter ever and its highest quarterly gross revenue on record.
And it's next year's presidential election year, so they're gonna rake in the advertising dollars.
Yeah, and that's what's advertising's kind of pushing it. They generate about 95% of the revenue from advertising. Much of its top line success has been advertisers increasing willingness to spend once again, which that's kind of what I was looking at. I was a little bit bearish on the advertising still. Apparently I was wrong. And it looks like people are starting to kind of turn the corner and maybe think maybe we won't be going into a recession. Who knows? But they still reported a $3.7 billion loss in the metaverse division. And that brings the total losses of augmented and virtual reality since 2021 to $35 billion.
I'm doing my part. That's all I can say.
Yeah, I know. So I kind of want them to shore this up because
no. They don't need to shore this up. They gave a 10-year timeline before they would reach profitability in that division, and they gave that 2 years ago. They said 2 years ago. They said 10 years.
Yeah.
Why are we rushing them now?
2021. And they did. I will say this. I think the losses were down somewhere around like 20% or something like that.
There you go, man. They said 10 years. And we're 2 years into it, and you're already like, I'm throwing in the towel, Rock.
No, I'm not throwing in the towel. I still own it. I'm still carrying it. Meta did face one of its most significant legal challenges. 33 states are suing the company for allegedly misleading Americans about the dangers of Facebook and Instagram on youth mental health. Do you think that's really a thing?
I don't want to get too far into this rabbit hole here. But most of these lawsuits are around minor children, young, impressionable boys and girls in later on grade school and middle school. And that's a very impressionable age for kids. And it can have an effect on them. It's not really talking, Brandon, about you and me. Our people, if we reach our age and our point, we've already, we're pretty set in stone in certain ways. There's very little you can affect us. But so the lawsuits are not based around that. So you have to look at it from that perspective. Yeah.
I think for adults, the mental health thing for adults is that they get online and they see that their Facebook friends might be doing better or have a bigger house than them. They want to be better than the Joneses. That's the old.
I couldn't care less.
Neither could I. I don't care at all. And I'm happy for people that have bigger houses than me and more money. That makes me happy. I like the post or heart it or whatever you want to do. I don't understand jealousy. I don't get it.
Do they have more money than me, or do they just have a bigger house?
Or do they,
because that's what I would like to ask them.
Like kind of look at the house and think, oh, look at all that money they don't have anymore. All right, and we cannot go a episode without talking about Meta or General Electric. So let's get into General Electric because they reported, and I think they're an important company.
I mean, you might as well just after this talk about restoration hardware, and we could call it a day.
Oh well, yeah, maybe, but I sold them, so
Oh, there you go.
just in time too. I want to pat myself on the back. A little bit of luck, a little bit of skill there, but also a little bit more luck too. I sold them before their latest earnings report when they took a dive. I smelled some trouble in the waters there with housing
Nice.
as bad as it is. So, but General Electric on Tuesday they reported earnings per share of 82 cents a share. Within their business segments, GE Aerospace, the revenue there grew 25.4% year over year to $8.41 billion. Beat the FactSet consensus of $7.96 billion. And GE Vernova, which was kind of what everybody was looking at because there's a lot of wind trouble all over the world. This includes results, like I said, from renewable energy and power. Revenue rose 14.1% to $8.13 billion. That was above expectations of $7.41 billion, driven mostly by electric and gas. But Larry Culp said GE Aerospace continues to experience rapid growth driven by robust demand and solid execution, largely in commercial engines and services. That's really what I own General Electric for, is their aerospace industry. So I've already sold General Electric Healthcare. Thank you, Larry Culp, for that. That was around a 20% gain. I plan on getting rid of GE Vernova as soon as it spins off. It's not a moneymaker at all, and I'm just going to continuously hold the GE Aerospace segment here. That's my plan so far, unless there's some sort of significant turnaround in Vernova. There's just too many problems in wind that I'll talk about here in just a minute. Total orders for General Electric rose 19% to $17.9 billion, including 34% growth in GE Aerospace orders, 3.4% growth in GE Vernova, and revenue rose 19.9% to $17.35 billion. That was well ahead of the $15.46 billion expected. Company raised full-year earnings guidance. That's always good news. They raised it to a range of $2.55 to $2.65. That was up from the prior guidance of $2.10 to $2.30. So quite a bit of an increase there percentage-wise. Free cash flow now expected to come in at $4.9 billion. Just 3 years ago, this company was negative on free cash flow.
Well, hold up. The company was a different company 3 years ago. It was a combined company of GE Healthcare, and where we're at now, aviation. So
okay, but it's still got Vernova in it, which is its weak link.
yes,
Healthcare was there too last year, and they were making a great progress last year already, even with all three of those companies being combined. Larry Culp has done a incredible job on turning this company around. We started covering this 2 years ago, I think it was. When I think the show title's like GE: The Great American Turnaround Story or something.
we've been doing this podcast too long.
I know, but listen, I called it the Great American Turnaround Story before it turned around. It was just in the process, and I can't say enough good things about Larry Culp.
Nice.
Okay, I would welcome him into my house to stay here as long as he'd want, even though he probably, won't do that. Anytime, he's like my best friend that I never knew right now.
Nice.
All right. Overall, a very strong quarter for General Electric. This has given me more and more confidence. They raising their full year guidance. I really expect even better things for this company in the future. Timing for the planned spinoff of the renewable power and gas generation business, which, as I said, is called GE Vernova, that got pushed back a little bit. So the prior guidance was sometime in early 2024. Now they're looking for second quarter of 2024. So still kind of early, but more mid. The expectations here were pretty low because earlier in the week, we got news that Siemens wind business lost more than $2.5 billion in its fiscal third quarter. This is a company that's traded separately than Siemens over on the European stock exchanges. And that stock dove 40% off this news. They're facing a number of issues, cost inflation, fixed price contracts that were signed a long time ago, constant regulatory uncertainty. So I think the expectations here for General Electric were set pretty low going into earnings. They beat those expectations. The wind business, look, they still lost in General Electric. They still lost $317 million in the third quarter. But going back last year, in the same quarter, it was a $934 million loss. So much more narrow on that side. And I think that, anytime you set expectations low for somebody like Larry Culp to beat, that means that you're probably going to have a good day on the stock market, and they had the best day in 3 years.
Well, here's my problem with the wind business. Number one, it's reliant upon government subsidies. And anything right now that's relied upon government subsidies is going to have a hard time with the state that the current government is sitting in right now. You're really going to have a hard time getting that money in. I mean, that's why Rivian Automotive is the CEO joined the lobbyists on Capitol Hill last week, because they're trying to lobby for more money. Everybody's trying to lobby for more money, and that could hurt. That could hurt them. But the thing going positive for them is the current administration goal of 2035 going all electric being sold. That would bolster their help if they need it. But
Yeah,
I don't know. It's unreliable is what I'm saying.
right.
If you could be completely private and be profitable, I would 100% buy.
So most of the problem is with offshore wind power, and that's what Larry Kolb said. Offshore wind, he said it's a higher cost application than onshore. So,
it's a higher upfront cost, but it has more of a renewable aspect to it, especially if you can put the blades underwater. It produces a lot more energy than.
gotcha.
We have never been able to prove blades underwater because it could cause harm, and rightfully so, to sea life. And so we will never be able to do that in the United States, because generally the coastal states are against harm, and rightfully so, harm and sea life. We got to take care of the planet that we're on, but it would be a huge resource of renewable energy if we could. Huge.
Okay. Well, with Siemens Energy plunging 40%, that wiped $3.16 billion off its market cap value. And this came off the heels of them saying that they were seeking up to about $16 billion in guarantees from the German government, which you can call it a bailout if you want, subsidy, whatever. But before they continue their operations in Germany, they need $16 billion from the government to be able to do it.
Well, I want to correct you on one thing. It is $15.9 billion, but it's 15 billion euros is what they're talking about at Siemens Energy. And the shares, so the company was spun off from the former parent Siemens in 2020. Since then, they fell as much as 39% to a record low in the last week after discussions of this became public. So it's already dropped because of this, right?
Right.
But how they're characterizing this, and I'm quoting from just in case you know, a Reuters article that came out on 10/29 around 11:47 a.m. But what it says in here is that big industrial orders that run over several years usually require these guarantees to secure principals or down payments, meaning they're going to take loans out against these guarantees to go ahead and finance this project that they're working on. That's how I read into this here. But there is performance guarantees that they also have to accomplish over a 3 to 5 period, or even longer, to ensure the viability of the project for their loans to go through and not have to be called at a time when they can't call them. So what's Siemens Energy order book has swollen to a record 109 billion euros as of the end of June. Around 20 to 30% of that is down payments. That's the problem with Siemens Energy, is they continue to, most of the revenue this past year has been down. Well, not most, sorry, 20 to 30%. That's actually, I don't want to say most. That's a large amount, I think, of your total revenue that's just down payments. That means you're going to get less of that going forward. because they're putting 20% down now. They don't have to pay that later on. I look at that as not a very strong argument for Siemens Energy here.
I do too, and Europe's having troubles macroeconomically all around. 1/3 of the companies have beat analyst expectations so far in European stock earnings. That's not a good thing. 2/3 of companies missing expectations over in Europe. It's just a bad economic story right now for Europe. United States, actually, so far, I mean, I expected an earnings recession. We're up 12% year over year on average.
Yeah, but well, all right. So, all right, apples and oranges. Apples and oranges. China had issues with their GDP. They're still struggling horribly bad in the real estate sector in China right now, with those massive, huge failures. But Europe's having a downturn in their GDP right now.
In real estate as well, in Europe as well.
Yes, the United States, however, and this is just what I'm seeing from the numbers, from the data that I'm seeing, and you're gonna have to, I didn't know you were going to go down this road, or I would have had numbers ready pulled up, but I don't. I can find them for you. A lot more of it than what should be is being propped up by the government right now, and I don't like that. They're from the bills that have been passed. They're using that money and they're putting it into the economy, paying these companies, but that money is just coming from taxpayers. I don't like that the government's propping up the economy. I think we need to allow the economy to move into a recession and not prop it up. Another way that it's propping up is with the loan forgiveness and pushing off student loan repayments. That's also propping up the economy, because a lot of those people are using their money for discretionary purposes instead of putting aside in escrow accounts, or so on and so forth. So apples and oranges, European countries aren't doing as much of that as much. They still are doing some. Every country does, right? We have to be honest here. Every country does, but they're not doing as much. And so that's why their economies are actually feeling the effects of the rate hikes.
So did we just kick the can down the road? Maybe we start to feel this a little bit more in January and February.
I've given you what I'm looking for it to start. I'm looking for those signs that I've said time and time again. I'm looking for credit defaults to start happening. Start off in just the credit card companies that are subprime lenders. It's going to start there. And I said another big signal is when we actually start student loan repayments, because a lot of people now have their budgets fixed for spending that money rather than spending it. I mean, rather than saving it.
Yeah, and it was a couple months ago. I think it was back in June, maybe July. Europe actually did enter in what is called a technical recession, 2 consecutive quarters of declining GDP growth. But so far it's been pretty mild. So, nothing extreme that's expected to last, longer than a year. So hopefully, if we go into a recession, it'll be mild as well. That's what I would expect, at least.
Well, I mean, all you recession guys came out of the woodworks last week. It was like cockroaches, because the S&P was dropping and having a correction. And I have said this over all the 2.5 years we've been doing this podcast. I've said it time and time again. You're going to get a few corrections a year, no matter what type of year you're having. The market's going to take a 10% drop. That's the technical definition of a correction is a 10% drop. The market's going to have a couple corrections a year, at least 2, maybe 3. It's just
NASDAQ, I think, is in a correction right now.
Yeah, I mean, it's a time for people to take their profits. It's a time to actually take a look at these sectors that are in this correction and say, all right, which one of these companies does not need to be in the correction with all the others? Which ones are my solid companies I want to put money in right now?
Right. And so, but it also worked kind of the other way too. When the S&P 500 and the NASDAQ were rallying, all of a sudden everybody was bullish, and there was nobody that's in my camp. And, at that time, nobody was left, it seemed like, in my camp of the recession callers when the S&P 500 was going crazy. But now that the S&P 500's dipped and NASDAQ's in recession, all of a sudden I find my camp a little bit more full again.
Yeah, and it's reactionary people.
Yeah,
Brandon, is being reactionary to the market. Can you be reactionary and make money? It's hard. It's hard. You have to walk a line. I've been doing this a long time. Yes, you can. I don't want to say you can't, but I want to preface it by saying that, that's a very hard road. People who, if you're a new investor and you try to be reactionary and day trade the macro events, more often than not, you're going to lose money.
Yeah, and don't pay any
That's
point of
just it.
view. Look, if you're a new investor, 70% of you in the first year are going to lose money. So
Yeah.
don't feel super bad about it. All right. Don't feel that bad about it. Just learn from it, move on. Eventually you're going to start catching back up and you'll be doing pretty well. But with all this news that we're just talking about, the PCE coming in at 3.7% in September, right in line with the expectations. The GDP report came out hotter than anticipated. Economic growth accelerating to 4.9%. And the labor market, 336 jobs added again in September. What are we doing here? Like, what is going to happen? Thursday, the average rate on the 30-year mortgage, 7.9%. Earlier than that, it was at 8.02%. Last time we had rates at 8% was in the year 2000. So what's the Fed going to do? Are they going to hold off the next time? I think they probably should, because it seems like to me when I'm watching the economy, I feel kind of like I'm in a hospital waiting room waiting for the doctor to come out, and they just keep telling me it's an issue of time. It's a waiting game. We have to wait and see what happens. And so if it's a waiting game, maybe they do pause. But
Look,
yeah,
Jerome Powell, based off his comments, is trying to be hawkish, right? He is not trying to be dovish at all. He wants to say 2% inflation, 2% inflation. He just comes out every time, 2% inflation, 2% inflation, hawk, hawk, hawk. However, he's not the sole person that makes decisions. You've had a lot of other people have come out and said, it's time to stop. It's time to pause at least.
But is that a good thing? Maybe short term in the market, but then that just kind of kicks the pain down the road a little bit rather than just ripping the Band-Aid off, doing one more rate hike now. If we all are in the camp that we think that that's going to happen, just get it over with and then wait and see what happens maybe.
I would say if I was him, I would do a rate hike, 25 basis points. I think that's what Jerome Powell wants to do. I don't know if he's going to be able to convince everybody else to agree to it is my thing. A lot of people are getting tired. They're getting the heat. It's a political season. I don't know if he's going to be able to convince the room to go ahead and move forward with that. But I believe 100% that that's what he wants to do is a 25 basis point rate hike.
Everywhere I look and everybody I talk to, everybody says the consumers are feeling the pinch. They're dipping into their savings or what's left of the savings. Eventually, that's going to affect GDP.
Well, and that's what they're waiting for. And that's what I'm like, if we could galvanize America, Brandon, you and I, galvanize America and tell them all, don't do any discretionary spending over the next 2 weeks, it will fix it.
Oh, and then the GDP, like not just GDP, but inflation would start to come down a little bit.
Inflation would drop like a rock.
Everybody starts saving your money, not just maybe for the next 2 weeks, but maybe for the next year, and then the problem can be resolved.
But we're consumed by commercialization and everything out there, and we see it constantly on social media. And we want to, I got to get this new belt, or I got to get this new car, or I got to get this new thing. I was talking about this earlier today with somebody. He was a business owner, a friend of mine, a close friend of mine, and he's very unassuming in the fact that he's a business owner. You wouldn't know that he's doing well, and we're talking about, would you spend money on a first class ticket, and he was amazed that somebody he knew was able to afford a first class ticket. I'm like, yeah, and I interrupted him. I said, yeah, but they're smart with their money, man. Not everybody's into this consumerization part of that the rest of America is. But everybody else has to have, the best seats and show off on Instagram and the best this. And that's what's really driving people to spend more than what they have. That's what makes companies like Affirm Holdings come about and show up and make money, because we always have to have it now before we can afford it. I don't want to get on my soapbox. I am right now, and I need to get off of it because we need to be investments.
I'm going to step on it real quick. Because most people don't have a savings account. Most people are paycheck to paycheck. Most people don't make any money in the stock market. So don't be like most people.
Right. I also I'll give you a couple definitions because I used the term hawkish recently. And if you're a new investor listening to us, you may not know what is he talking about hawkish. There's hawkish and there's dovish, right? So dovish, if a Federal Reserve chairman is being dovish to the market, meaning he's giving them whatever they want. He's appeasing the people, and he's giving out free money right and left. If they're being hawkish, it means, we're raising rates, we're tightening our spending, we're reining it in. That's what I mean by hawkish, meaning he's really not giving them what they want, and he's going to rein in spending, and he's going to raise the rates. Dovish would be the opposite of that. It's just a term used in the financial markets. Sorry, Brandon, go ahead, continue.
No, that's all I had. That's all I had.
Oh, perfect. That was a good way to end there with some good information for people. So if you start watching CNBC as a new investor, you're like, what are they talking about here? Now you know. Now you know. All right. Final thoughts, Brandon. Go ahead.
Read books, use the Wall Street Journal, and if you're a new investor, don't watch CNBC.
I disagree. I believe CNBC is great for new investors, and here's why.
I think it's great for new traders.
All right. Well, it's great for new investors too, because you get real-time news spouted out at you as it happens, and you can see how it affects the markets in real time. But you also learn a lot of the terminology, and you learn a lot about what people are looking at when they are making decisions, because you have people come on there that are heads of companies and CEOs, and they explain why they make this decision or how they did this, if they're allowed to get the time to do it. So you do learn a lot in that respect. Going on to your point is why you say it's not, is that you feel like it encourages day trading and loose trading, and you're chasing the dragon type trading, which is bad.
Yeah, and you get real-time emotion with it. So watching the interview is fine, but just be careful about like the people that are because they're reactionary on CNBC. I think it gets them, it brings in ratings.
You have to be. You're getting real-time news in the moment. You have to be reactionary. I'm sorry. I disagree with you.
The day-to-day mechanisms of, here's where I want to say that. Okay, so if you're watching CNBC, fine. But make sure, slow down. If you're a long-term investor, slow down your thinking. All right. The day-to-day mechanisms of every company in the S&P 500, for the most part, they're much slower than what the day-to-day stock market news would make you think. The strategies don't change that quickly. The numbers don't change that quickly. If a CEO is going in on Monday to work, it's probably going to be a very similar day that he had the Friday before, right?
Yeah.
So keeping that in mind, thinking slower about it, and not being as quick to react as everybody else when you're a long-term investor, I think is beneficial.
There you go. Cool. All right, man. As always, we hope that we have been entertaining, educational, and uplifting, because we want everyone to make money. Have a good night.
Have a good night.